Hi folks, Dan Bird here with the Daily Scan for Tuesday, April the 29th. While it is Tuesday, I will not be doing a technical Tuesday today. I'm still on the road and haven't had a chance to put anything together, so we will probably pick that back up when I get back, especially since I don't know when I'll be able to continue to do these after the close each day. Hopefully I can do it, but we'll see. Anyway, the market was in pretty good shape today. It's okay, still climbing a little bit higher. We'll take a look at the comparison here in a minute. As always, I am not a financial advisor, so anything I say here is for educational purposes only, and you should make your own investment decisions. Nothing that I say is meant as a recommendation to buy or sell anything. So if we go to the home page real quick, you can see that the market bias is continuing to move higher, actually sharply a little bit higher today. So everything in the market is still very positive. So that's great. If you look at the S&P, S&P had another slight update today. You can see it's well above its downward channel now, well above the 5450 level. So we're at 5560 right now. The let's see where the 50-day moving average is at about 5600. So we need to get through that. It's the next level, next resistance level, but things are looking pretty good. The volume picked up slightly today, so that looks pretty good. So that's continuing to go higher. Positive news, the NASDAQ 100 looks similar. It's going higher and sitting right below its 50-day moving average. So if it can get through that, and the 50-day crosses back up and goes back above the 200, we'll change this from a death cross to a golden cross. And death cross, I covered this in a past session, so you can go back and look at it, but it doesn't necessarily mean anything. Usually there is a rally when the death cross occurs, and then the thing to really figure out is whether that's going to continue or not. And right now it is definitely continuing. The volume on the NASDAQ 100 was lower, though, today, so there's not a lot of conviction in this move yet. We'll see if I can get through some more levels here shortly. And Russell 2000, small caps and mid caps, looks the same, heading towards the 50-day. So very similar to the rest. And of course, Bitcoin's still going sideways. So again, another consolidation day. This is starting to build up some strength right through here. So it may actually break out at some point. And I think it's probably going to head back up to 100,000 up here. So Bitcoin is continuing to go sideways. That's a John Carter squeeze, actually. Let me see. I've got a squeeze chart list here. So there's what the squeeze looks like. Squeeze happens when it turns bright green right through here. That means that it has been moving sideways for a while and is getting ready to explode one way or the other. And in this case, it went higher. So we had a consolidation. That's a squeeze. And then a move up. And consolidation theory says that whatever that move up to the next consolidation level, it's usually the same distance to the next level up. So the distance right here is at, say, let's call it 85,000 up to about 95,000. So that's about 10,000. So that puts it up here about 105,000. So definitely over 100. But it's not showing a squeeze here yet, even though it's moving sideways. So the Bollinger Bands have to pull back inside of the Keltner channels to actually make it a squeeze. And they're actually pretty wide right now. So there's a lot of volatility in Bitcoin. That's what this is telling you. So not really a squeeze at this point, but it is building up some energy. So we'll see which way it goes. All right, let's take a look at one thing I want to point out is I mentioned this before, but Stockcharts.com is having a special. If anybody wants to take advantage of it, you can click right here on the website. The website is breakpointtrading.net. No charge to go to the main page right here. You can click on that and sign up for Stockcharts.com and you get 2 extra months for free. If you use my personal email address as a reference, then I will get 1 month. But of course, there's no, you don't really need to do that. You can get the 2 months just by signing up, clicking right here. But I certainly would appreciate it. But no problem. I encourage you to do it. It's a great platform, especially if you like to do charts and technical analysis. So it's a great way to take a look at that. All right, so let's take a look now back to the dashboard. We'll look at the dashboard. You can see most of the indexes were up today. The Dow was up 300, all of them less than 1%. And more importantly, the VIX dropped a little bit more, still above 20, but dropped a little bit more today. There's the NASDAQ 100. Here's the VIX, came down. That's the direction we would like to see everything moving in. The 10-year also went lower. So the 10 years continuing to move lower, and the dollar perked up a little bit today, moved back up slightly. Commodities, gold, off a little bit today. So gold is starting to pull back some. And gasoline also pulling back significantly. And finally, crypto, you can see Bitcoin right here pulling back after hours. It's still trading, of course, but it's basically flat right now. That's what it's been for the last few days. And will probably continue that way for a little bit until it breaks out. So if we look at the sectors down here, you can see advancers and decliners. The one with the most advancers are staples, financials, industrials, and utilities, mostly primarily defensive sectors. And it's really a mixture over here. This is for the ones that are outperforming for the day. Financials and staples were at the top. Those are basically defensive sectors. Technology is up near the bottom, and energy, that is an aggressive sector, and the rest is just sprinkled through. So it's not really definitively going one way or the other at this point. Here's the NASDAQ 100 earnings that came out yesterday and today. And let's see, Starbucks. I actually put this up here. So Starbucks after hours is not really doing much. So I'm not sure if they've actually reported yet. What else do we have? PayPal. Let's look at PayPal, see what it's doing. After hours, PayPal not doing too much. So even these are reported after hours, they might not have actually had their calls yet. What else? Honeywell, AstraZeneca, Regeneron. Those are all the ones for today. If we look at this one for yesterday, NXPI, including after hours, NXPI, this is a semiconductor stock, and you can see down almost 7% for the day and down a little bit more after hours as well, down $13. So it did not have a good day. Let's look at semiconductors themselves. If we go back to the main page and look at this new Dow theory over here. And underneath this will show you the Dow theory, which is the industrials and transportation. But one of these is the NASDAQ versus the semiconductor group. And you like to see semiconductors outperforming, but in this case, they are not. The NASDAQ actually had a pretty good day over here, but semiconductors did not. They didn't really move much at all. In fact, they closed below the open. So that's not a good sign. It's really only 1 or 2 days, so might not be telling us much yet, but it's something worth watching. Continue to watch this chart for subscribers. You can get it right there on the homepage, right here where it says the new Dow theory. For if anyone's not a subscriber, you can at least get this one, but you won't be able to get to these 3 here. So it's worth keeping an eye on that semiconductor group to see what it's doing, because they're the ones that really should lead the market higher. All right, one subscriber asked me about the seasonal pattern. I'm going to show you 2 things. This is the post-election year seasonal pattern from 1949 through 24 versus 25. And keep in mind, this is every 4-year occurrence. So even though it goes back to 1949, you have to divide, that's roughly 75 years. So divide that by 4, and it's about 24 years, something like that. But this is the historical pattern. The black one is all post-election years. The pink one is the 5th year of a presidency, which is what Trump qualifies as right now. The next one is all Republican administrations. You can see that's the lowest line down here, the green one. And then the incumbent party losses during a post-election year is the pink line. But in general, all of these pretty much are tracking roughly about the same with each other. But look where we are right now. We are significantly off So this year is definitely an outlier versus all of the other years. So it is going to skew the number. Once we finish this year, we'll see how we end up. But it could actually bring some of these lines down slightly just because of this year, since this is an average over that period. But you can see we are definitely significantly below. We started off actually significantly above. Now we're very much below. So it implies that there should be a near-term bounce, at least to get back to the mean, back up, back on track with the 75-year cycle. So we'll see if that happens. The next one is, what is May? We're heading into May next week. So what does May look like going back, 21-year cycle as well as post-election years back to 1950. So the dashed lines are post-election years. Just like I mentioned, it's a smaller sample than the dark lines. The dark line is all years. The dashed lines are just post-election years. However, you can see that the post-election years usually are a little bit better than most other years. So we should be getting a rally through here. We haven't started yet, but these are the things to watch out for. Now we have some catalysts coming up. The jobs number, I showed some of that yesterday, and I'll do that again Thursday before they report on Friday, if I can. The FOMC meeting is on the 7th. The general consensus is that the Fed will not do anything. They won't raise and they won't cut. I think that's probably true. I think the jobs number will come in pretty much flat. Or if it's up at all, it won't be up by very much. We'll look at that on Thursday. So I don't think the Fed's really going to do much. They probably will hold steady. One of the reasons is that they know what's coming in June and July, and that is based on the base effect. The CPI will look like it's starting to go back up again. So they don't want to cut and then have to raise 1 month later. So they would rather just stay flat and then see what happens the next month. And then, of course, CPI is on the 13th. And CPI on the 13th, this particular one, and we'll cover this also the day before, but this one is going to be significantly lower. I think this is going to maybe even surprise a lot of people. I think a lot of people have been talking about tariffs being inflationary, and this CPI is going to show them that that's not the case, at least not yet. So I think that this CPI is going to be much lower, maybe even close to 2%. We shall see. And then options expire on the Friday right after that. So a lot of things happening in the first 2 weeks of May. And then right about there in the middle of May is where the rally starts in post-election years. And then right around Memorial Day, right after Memorial Day, there's a spike as well. Then we go into the summertime. Summertime is going to be a little dicey, I think. We'll talk about that when we get closer. But that's what the May market performance looks like. I will put this in the newsletter this weekend, so it'll be in there for everyone. The other question from a subscriber was, I didn't really completely understand the question. It has something to do with the Magnificent Seven and which ones were weakest or strongest. So a couple of things that I want to point out. One, on the website, on the charts page, on the left hand, the blue column near the bottom are the Magnificent Seven. And you can see how they are performing right now. This is just like the market bias matrix, short-term, medium-term, and long-term. And as soon as they change, like NVIDIA just got a short-term up signal today, bullish signal, that's the time where you want to start accumulating. These were all red recently, about a week or two ago. This column, the short-term column, was all red, just about all of them. They're all now turning green. They're continuing to turn green. The next thing to watch for is the medium term. And you can see on that, Palantir, just by glancing at this, you can see which one's the strongest. Palantir clearly is the strongest one. NVIDIA was the weakest one, and Meta. But NVIDIA actually had 3 reds all the way across. Meta at least still has a long-term bullish signal, but NVIDIA had 3 bearish signals, so it was the weakest one. But the other way you can look at this is up here with the Magnificent Seven trend model. This will show you the same thing, short-term, medium-term, and long-term, but now it will show you when the signals changed. So you can see right here, NVIDIA just changed today. Amazon just changed yesterday, and Arista Networks just changed yesterday. And you can look at each one of these either on a long-term basis or a closer in basis. And I'll just step through each of them, starting with Google. And you can see whether you think, what you think is the strongest one or the weakest one. You can see they've all been in downtrends. They are now recovering. They've got a higher high. This is Google. This has a higher low and now a higher high. Pull back a little bit to the 21, but that's a time where it might bounce and go back higher. That's what you want to watch for. So it looks like it's starting to recover. And each of these looks similar to this. There's Amazon saying same thing, higher low, higher high, starting to recover. There's Apple, same thing, moving up. Here's Meta. Meta basically has a double bottom right there. It still has a lower high, so it has not really had a character change yet, but it's heading that direction. So Meta to me right now, of those that I've looked at, is the weakest. Microsoft, also pretty weak, but you can see right here, Microsoft is right at a really critical resistance level. It's hit it. This is the third time it's been there. So it's got a higher low down here, but it needs to break out of this to make a higher high and break out of that triple top right there. So I would still say Meta is probably the weakest, and then Microsoft. NVIDIA also has been very weak. Just got a short-term up signal today. It's got a higher high, but it's got a higher low rather, but not a higher high yet. So it really needs to get above its 50-day. So those three, Microsoft, Meta, and NVIDIA, are the three weakest. Tesla actually looks pretty strong. Tesla's sitting right at the 200-day moving average. So it's at a very critical resistance level. Netflix is probably the strongest of all of them. Netflix is just, after earnings, just simply going straight up, gone parabolic. So the time to get in is when it went above the 21-day right there, and it continues. So Netflix is probably the strongest of them. There's Broadcom, looks pretty good too. Higher low, higher high. That's a character change. It's moving higher. Costco, I'll explain why Costco is in this group in a second. Costco is right here at a very critical, very important resistance level. In fact, if I draw it in right here, just a horizontal line, I'm not sure if I would call this a quadruple top. I don't know. It's very, very critical resistance right there. So it's sitting right on that resistance level, and it needs to get through that. So Costco is one to watch because that breakout could result in a significant move higher. This is typically what you see with a squeeze as well. Let me see, where's the squeeze? Yeah, look at that. That's a squeeze. So you can see it's been in a squeeze all the way back here. So that's a massive squeeze right now in Costco. And you can see the Bollinger Bands are even squeezing even tighter now. So which means the green area out here is getting wider as well. That's what tells you that it's in a squeeze. So Costco is in a monster squeeze right now. And if it breaks out of this level at about 9, let's call it 1,000. If it breaks above 1,000, it could move quite a bit higher from there. So keep an eye on Costco for sure. Where was I? Let's go to the next one. Palantir, which has been the strongest one. You can see it clearly is still very strong. It's going to hit, I talked about this yesterday, it's going to hit resistance up here. And we'll see if it pulls back a little bit. But that one might continue to go up. There's Arista Networks. It's got a higher low and a higher high right at the 50-day right now. So all of these are at critical resistance levels. We'll have to see if they can continue. Lilly has been very strong, especially since they made their announcement last week or the week before, where they are going to be offering a pill form instead of an injection for the weight loss drug, Wegovy. So ever since then, Lilly continues to be strong, continues to go up, and doesn't look like it has any intention of stopping. It's now above this resistance level, and this is the next really key, very important one at about 930. If it gets above 930, it should probably take off even higher. All right, that's it for tonight. That's two things I wanted to cover. Thanks for watching. Please like and subscribe. Let me know what you think. Let me know if there's anything that you would like for me to look at, and I'd be happy to do that. Tomorrow I will be in Roanoke, Virginia. I don't know if I'm going to have a chance to make a video tomorrow or not, but we'll see. If you don't see one, then you'll know. But I will be able to show a new map because nothing new changed today. Still, the map is still looking like this. So right here in Frederick, Maryland, and tomorrow I will be right down about here in Roanoke, Virginia. So thanks for watching, and I will talk to you soon. Take care.